I think the Australian economy is well placed. I think we'll still have some rate cuts this year. As far as like the underlying economy, we're going okay. All the companies we speak to say things are still pretty tough, but things haven't deteriorated. We've still got low interest rates, low petrol prices, and we're starting to see some good strength in retail stocks. They had a really good trading period throughout Christmas, and this has continued into the new year. So a couple of stocks we're playing in that sector are RCG and Pac Brands. We both think they've got good momentum in the underlying earnings, and we think that will continue over the coming year. I think the consumer has seen their property prices increase over the last 12 to 24 months. We have low interest rates and low petrol prices, which when you speak to all the retailers, I always say the two things that drive retail sales are interest rates and petrol prices. And we've both seen those at historical lows at the moment. So we're quite confident on the consumer. They're not going out and spending a lot above their normal spending patterns, but they're really directing it towards quality products, and that's how we're playing it through. Brands that are really resonating with the consumer, and we think those stocks, RCG and Pac Brands, are capturing those retail dollars. One we're looking at the moment and we're invested in is Pac Brands. The catalyst for us is earnings upgrades, which is from a function of moving from a moving from a wholesale model to a retail model. They've rolled out their bond stores, and we've seen significant uplifts in margins, because when they sell through the wholesale channel, they're getting a much lower gross margin. Through the retail chain, they get a much higher gross margin. So we're starting to see this flow through their numbers, and this is likely to continue for the next 3 to 5 years. The risk for Pac Brands is really if the Bonds and Sheridan stores, which are having really good comp sales at the moment, start to roll off. That store rollout, which they're talking about over the next few years, will start to, they'll have to pare back the store rollout numbers, because the sales aren't just supportive of that network. So the big risk to Pac Brands is comp store sales. If they roll off, the store network expansion could be off.